In the complex world of finance, investing in stocks can seem like a daunting endeavor, especially for beginners. Yet, it's a path that offers the potential for significant financial growth and security. If you're new to the world of stocks and investments, this guide is your compass to navigate the terrain with confidence. We'll break down the fundamentals, explore various strategies, and provide you with the knowledge needed to embark on your investment journey. Before we dive in, make sure to hit that subscribe button below. So, let's dive in. Stocks represent a share of ownership in a company, giving the holder a claim on a portion of its assets and earnings. When you purchase a stock, you essentially become a shareholder and own a piece of that company, however small it might be. Companies issue stocks to raise capital for expansion, research, or other business needs. Over time, the value of these stocks can rise or fall based on the company's performance, market trends, and broader economic conditions. As an investor, the goal is to buy stocks when they're undervalued and potentially sell them when they appreciate, thus earning a profit. It's important to understand that investing in stocks also comes with risks, as their value can decrease, but with a strategic approach and informed decisions, stocks can be a powerful tool for building wealth. Before investing in stocks, it's essential to set clear financial goals. These goals serve as your roadmap, helping you determine why you want to invest and what you hope to achieve. Whether it's saving for retirement, buying a home, funding your child's education, or simply growing your wealth, having well-defined objectives will guide your investment decisions. Additionally, understanding your risk tolerance is crucial at this stage. Some investors are comfortable with higher risk investments in pursuit of higher returns, while others prefer a more conservative approach to safeguard their capital. By defining your financial goals and assessing your risk tolerance, you'll be better equipped to choose the right investment strategies and stay on course toward your financial aspirations. The stock market is a dynamic ecosystem where investors buy and sell shares of companies. Essentially, it acts as a marketplace for businesses seeking capital and investors seeking opportunities for growth. When a company decides to go public, it lists its shares on the stock market, and its performance, along with broader economic factors, determines the value of these shares. The market operates in a series of exchanges, like the New York Stock Exchange or the Nasdaq, where specific stocks are traded. Daily stock prices can fluctuate based on supply and demand dynamics, company news, and global events. As a newcomer, it's vital to grasp that while the market's short-term movements can be volatile, a long-term, informed approach to investing often yields positive returns. Familiarizing yourself with the market's intricacies aids in making more informed decisions and understanding the forces that influence your investments. Stocks, while seemingly similar, come in various types, each with its own characteristics. The primary distinction lies between common stocks and preferred stocks. Common stocks are the most prevalent and typically represent ownership in a company, with shareholders having voting rights and the potential to receive dividends. Preferred stocks, on the other hand, often don't carry voting rights but come with a higher claim on a company's assets and dividends. Additionally, stocks are categorized by market capitalization. Large-cap stocks belong to established, well-known companies with significant market values, while mid-cap and small-cap stocks pertain to companies of varying sizes, from medium-sized enterprises to smaller startups. Understanding these distinctions is essential when considering your investment strategy, as different types of stocks carry varying levels of risk and potential reward. When it comes to choosing your first stocks, research and strategy are key. Start by conducting thorough research on companies you're interested in. Look into their financial health, management team, competitive advantage, and growth prospects. Two primary approaches to stock analysis are fundamental analysis, which examines a company's financial statements and performance, and technical analysis, which focuses on historical price and volume data. Your choice between these methods often depends on your investment goals and personal preferences. Additionally, consider diversifying your portfolio by investing in different industries and sectors to spread risk. By making informed decisions and diversifying your holdings, you'll be better positioned to make your initial foray into the stock market a successful one. When it comes to navigating the stock market, there are various strategies to consider. Investors can choose between short-term and long-term approaches based on their goals. Short-term strategies involve buying and selling stocks within a relatively brief period, often capitalizing on market volatility, while long-term strategies involve holding stocks for extended periods, potentially benefiting from compounding returns. Within these approaches, specific strategies like dividend investing focus on acquiring stocks that pay regular dividends, providing a steady income stream. Growth investing aims to identify companies with strong potential for future growth, while value investing looks for undervalued stocks with growth potential. The key is to align your investment strategy with your financial objectives and risk tolerance, adjusting your approach as needed over time to maximize your portfolio's potential. Opening a brokerage account is the gateway to entering the world of stock market investing. A brokerage account is a specialized financial account that allows you to buy and sell stocks, as well as other securities like bonds and mutual funds. To get started, you'll need to choose a reputable brokerage firm that suits your needs. Online brokerage accounts have become popular for their convenience and accessibility. You'll typically provide some personal information, fund your account with the amount you wish to invest, and then you can begin buying and selling stocks. Keep in mind that brokerage accounts can come with different fee structures and account types, so it's essential to compare options and select the one that aligns with your investment goals and preferences. As the market evolves, so should your portfolio. Periodic reviews ensure that your investments remain in line with your financial goals. Over time, due to the varying performance of assets, your portfolio's original allocation might drift from its intended balance. For instance, a stock performing exceptionally well could become a larger percentage of your portfolio than initially intended, potentially increasing risk. By assessing your portfolio regularly, you can rebalance, selling assets that have appreciated and buying those that have declined, to maintain your desired asset allocation. This not only keeps your investment strategy on track but also offers opportunities to buy low and sell high. It's a proactive approach that ensures you remain aligned with your financial vision, adapting to changes in the market and in your personal circumstances. When it comes to investing in stocks, understanding tax implications is crucial. Different investments may have varying tax treatment. For instance, capital gains tax is applied to the profit you make when selling stocks, and the rate can differ based on how long you held the investment. Dividend income may also be subject to taxes. To optimize your returns and minimize tax liabilities, it's essential to consider tax-efficient investment strategies. This may involve utilizing tax-advantaged accounts such as IRAs or 401k, where your investments can grow tax-free or tax-deferred. Additionally, being mindful of holding periods and taking advantage of tax loss harvesting can help you retain more of your hard-earned gains. Staying informed about tax laws and consulting with a tax professional can further assist in making informed investment decisions that align with your financial goals while minimizing the impact of taxes. We've covered the fundamental aspects of getting started with stocks, from understanding the market to selecting the right strategies and managing your investments effectively. To stay updated with the latest insights, tips, and strategies, be sure to hit that subscribe button below. Thank you for joining us today.